Good afternoon and welcome to the Market Wrap for APW, week ending 31st of the 12th, 2021, last wrap of the year. This is number 81. Why do we do it? Just to share information as to what we found out during the week about what's going on in the residential property market. Simple as that, really. If you like it, do subscribe. If you don't have to. Press on the reminder button. It'll let you know when there's a new one up there, and press like if you do like it. So, what's going to happen in 2022? Rising mortgage costs, squeeze on affordability, and the end of stamp duty holiday will cool the red-hot market, experts have warned. And it will do. We have a great example of, in the Daily Telegraph this week, of what the effect of rising mortgage costs. It's a very sad tale, really. The most financially stretched homeowners in Britain will be first to be hit by the Bank of England's change to 0.25%. Leaseholders who have been pushed onto a standard variable rate mortgage because they're trapped by the cladding scandal will feel this. There's an example of a lady who bought a property for $245,000. Her fixed 2-year rate finished in July last year, and she had to go into a variable rate. She can't move away from her existing lender because basically her house is worth nothing because it hasn't had a certificate for the external part of it to show that it is a secure property. So she bought it for $245,000. She was on she had to stick with her original lender. Her payments have gone up from $1,100 to $1,300. She's had to reduce the rent by £200 because embarking where they are, city rents have fallen. She's also had to personally guarantee the buy-to-let mortgage, so if it does go west, she'll lose her home as well as this flat. Including management costs, ground rent and insurance, she's now losing £500 a month. She says, it's my only buy-to-let. I bought it for some security for the future, for retirement. I've got sleepless nights about it. Bless her. It's a nightmare. What is the future for interest rates? According to the Office of Budget Responsibility, they're saying the bank rate will rise in small increments to 0.75% by the end of 2024. It could go higher, but they're saying it probably won't. What can this lady do? Paradoxically, the best protection for her is the fact that it is an unsellable flat. So the mortgage people would not repossess it because they can't sell it either. So that is rising mortgage costs at its worst. For most of us, it'll just be a case of having to fork out a little bit more money and perhaps not making as much or having a property washing its face. So the message is, look at your mortgage options now. Don't be caught later. Okay, so could the slowdown, squeeze on affordability, end of stamp duty, all those sort of things, could it be slowed down? Yes. If the surge in Omicron cases forces the Bank of England to push back rate rises, the pandemic's continuation may also discourage would-be sellers from listing their homes, maintaining the shortage that we have at the moment. However, it's more likely that we are going to have a colder market, not as red hot as it is at the moment. But bear in mind, it's not all over the UK that you've had an enormous growth. There are 9 markets in the UK that have actually gone down. Okay, and these are prime central London has got 6, which is City of London, City of Westminster, Kensington and Chelsea. House prices were down by 14%, 12% and 5% respectively compared to 2017. Why? Because half the buyers are typically from overseas, and with no flow of money coming from overseas because there's no travel, they can't buy. Also, the Airbnb market has collapsed because the tourism's dried up. Rents are down by 20%. Chesterton's estate agents say since last June there's been a stark contrast between Zone 1 and the frenetic activity we've seen in more leafy boroughs of London. Okay, so centre of London has got 6 of these places. As an asset class, apartments have underperformed houses. According to Hamptons, when they analysed the flat market, prices were down in a total of 56 places in apartments and flats. And we take commuter town of Reading as an example. Prices were up in 2021. The prices were down in 2021, by 1% compared to 2017. House prices were up on average, but overall it was dragged down by 6% because of the flats. Why is this? Because when Crossrail was announced to go to Reading, there was a huge building boom, and what that led to was oversupply. Then at the same time, Crossrail has been plagued by problems, and it hasn't occurred that quickly. So there's a saturation of flats in the centre. In Wandsworth, there were the Nine Elms development concept, and that's, that has saturated the market again. House prices are down by 3% compared to 2017. Tower Hamlets has had a double whammy, which is cladding, which has caused a lot of problems, and also people who don't want to work in Shoreditch or Canary Wharf, or haven't been working there, so there's no need to rent in Tower Hamlets. Barnet, same sort of thing. Also, the role of the local economy in some cases had a negative effect. That is the case in Aberdeen. In Aberdeen, prices are down by 12% since 2017. It's based on oil, and when oil price tanked in 2016, house prices dumped by 27%. They've done the same this year, although oil prices are starting to improve. And interestingly enough, with the increasingly strong working from home concept, house prices have improved, and they are actually starting to go up, whereas flats are not. So looking at all the message here is, be careful what you buy. It's not going to go up in all locations. So be selective on the type of property and the location of. Okay, so briefly then on to what do the experts say. The Daily Telegraph surveyed 14 analysts. So here we go. 14 analysts saying what do they think would happen in 2022. Halifax suggests a 1% increase. The Centre for Economics and Business Research, a consultancy, said 2%. Savills, Connells and Hamptons all said 3.5%. Strutt and Parker are saying 7%. Okay, why is it a huge slowdown? Very simply because it's reluctant buyers. And here's some complicated facts, but I'll try and get them across well. Demand, which property website Zoopla measures by numbers of searches and inquiries, has cooled. In June, it was 50% above the 5-year average, but by mid-December, it was 4%. The main driver of rising house prices since the pandemic began, which is wealthy homeowners, not beholden to mortgage lenders and willing to pay over the odds, is no longer a factor. All the moves by these wealthy owner homeholders have moderated now, said Richard Donnell of Zoopla. So there you're seeing why it's not going like it was. Next year, the market will depend more on buyers who take on substantial mortgages, meaning all eyes will be on more interest rates, so that's self-evident. So there are a number of factors, though, which should still continue to push up the market, which are, according to Lucy and Cook of Savills, small increases in mortgage costs could be offset by plans to water down the stringent tests on who can take out a loan and how much they can borrow. I don't know if you've read about this, but basically there may be some watering down of the amount of multiples you can borrow, but still have the same stringent tests on interest rates. In addition, Help to Buy equity loan schemes, first-time buyers, new builds, with a 5% deposit ends in 2023. So there's likely to be a spike in sales before that, fueling demand and prices. Home prices will also rise unless supply shortage eases. The number of homes for sale in mid-December was 31% below the 5-year average. The ratio of sold to unsold properties, a measure of demand versus supply, hit a 21-year high in June. So there's a lot of factors which are still pushing house prices up. Lucy and Cook said another lockdown could also delay the flow of homes for sale in the new year, despite early spring being known as a selling season. And finally, a guy called Neil Hudson of Residential Analysts, who are also a research company, said the first half of 2022 could see stronger prices than people predict. So if we take all those bits of information together and jumble them about and add them all up, what does it tell us? It tells us that the worst scenario is perhaps 1% growth. Having said that, the Bank of England said house prices could drop by 15% before the pandemic. So it could be completely wrong. Or we could have a strong first 6 months. The point is that look at your mortgage now, remortgage it if you can or if you need to. Consider the sort of property you're buying. Look at all the research, caveat emptor. make some good buying decisions based on not your heart but your head. Don't buy, as I said, don't buy in Whitby because it's where you're from, although it does do great fish and chips. Buy where it makes sense. So that's it for this year. I just want to say thank you very much for watching. Do subscribe and click on the like button, all that sort of stuff if you can. Do have a good new year and all the best of 2022.